All right. Good afternoon, Simpler family. I hope y'all are doing well on this Thursday, or like we like to call it, Friday Eve, November 21st. I'm excited to be here with you today. We're going to talk about what to do if you are trading options and you are only able to buy one contract. How do I trade that scenario? We have a lot of people that maybe you're new to trading options, just not comfortable putting on a lot of size, or you're trading from a smaller account and you can only afford to purchase one option contract. And I'm here to say that regardless of the number of contracts you are able to purchase, you can trade a setup from entry to target the same way. The only difference is obviously with one contract, trimming or scaling out of part of your position along the way is not possible. So, I personally trade supply and demand. I have had a lot of success, doubled my account 7 times in the last 2 years since beginning trading supply and demand. And so my entries and exits are based on a demand zone, which on my screen, this green box down here for SPY today, this is the demand zone. The red box that you see above is the supply zone. So if I am going long out of demand, supply is my ultimate target. If I am going short from supply, then demand is my ultimate target. Okay? So I chose this example because it's a name that most of you are probably familiar with trading. So what I do is I wait for price to come down into demand, and I will have an alert set just above my demand zone telling me that when that alert goes off, SPY has come down into demand, and that is an opportunity for me to get long. So, whenever I am buying straight up calls, which is all I trade, is straight up calls or puts, buying them, I like to trade at the money. So in this example with SPY 588.04 is the top of the demand zone, and this is where my trigger long or my entry occurs. So I would choose, because this is a day trade, and this price action happened after the first hour of the market. So I would choose on my option chain, I would choose November 22nd expiration. That is tomorrow's expiration. The reason why I don't do a 0 DTE is I prefer to trade 0 DTE if I'm able to get my entry in the first 30 minutes to an hour. This entry occurred right at that deadline. So, first things first, if I'm trading one contract and I'm trading the 588 calls, right now, these are trading for $6.50, but I'm going to show you what price they would have been trading at my trigger, which was 588.04. If I adjust the cost of the option here down and watch the expected SPY price when it is 588.04, that's the approximate cost of one contract here on SPY. So let me just, rather than waiting all that time, I'm going to go for about $2.50, which is $250 actually, the actual cost. Because one option contract in SPY represents 100 shares. So if the cost says $2, it's actually $200. So at 588.04, the approximate cost of this contract would have been $183. So looking back on my chart right here, we would have paid $183 for a 588 call expiring tomorrow. All right. So hypothetically, we buy one contract here as SPY came down to my trigger. Now, you don't have to trade supply and demand to use this method of trading one contract. Whatever strategy that you personally trade will work. So when you have a certain strategy that you trade, it should have where what price you want to enter a trade at, and it should have a target, what price you want to exit your trade at. Honestly, if you're trading a strategy that does not have those two things, I would find a different strategy to trade. But I believe most strategies have both an entry point and an exit point. So hypothetically, we have bought a November 22nd SPY 588 call as price hit my trigger long or my entry point. Now, as price is traveling to the upside in our favor, and we get to levels on the chart that you would normally, if you had multiple contracts, be trimming at. So this first level that if I had had multiple contracts to trim, the first level to trim at would have been right here. But since I only have one contract, once price makes it to my first trim level, I like to run a Fibonacci Fibonacci retracement from where the price began. So at the wick of this candle right here in the green zone, up to where my first normal trim would have been. Pay no attention to these candles over here right now. All right, so at this level, I would have trimmed having multiple contracts, but you only have one contract. So you say, Melissa, I only have one contract. I can't trim there. My answer is run your fibs and stay in the trade as long as the 382 Fibonacci level holds as support. So you can see here there was a dip after price got up to this trim level. There was a dip, but we did not cross below the 38.2, meaning you're still in your one contract. All right, now we're going to go up to the next level that I would have trimmed my position at, and that would be that rectangle that you see right here on my screen, which is called the PMZ or pre-market zone. That would have been my next trim. So now we have ran our fibs up to this second trim area. And my answer is still the same. Stay in your one contract as long as the 38.2 holds as support. And you can see even on the pullback, the 38.2 held as support. So you remain in your one contract. Remember, target is here at 595.31. to 599.23. So we are still in our one contract. If for some reason price had fallen below this 382 and you exited your contract, it's still a winner, right? Because we entered down here and we're taking profits here. But in this case, the 38.2 held as support, meaning you stay in that one contract. Let's go up to the next level and say that you're in the trade and we're right up here at this level, we're at pre-market high. Okay, so it would have been a line on my chart to trim or move stops up at this point. So at this level, same philosophy applies. You stay in the trade as long as the 382 holds as support. Now, what happens if you get to target and you have the one contract? What I have found I'm most comfortable doing is then saying, okay, I've made it to my target. But if the momentum stays to the upside in the direction that I'm trading from demand, then we could possibly come into some higher levels inside of my target zone. So, but how do I protect my profits even further? And it's at this point, if we make it to the bottom of my target, it's at this point that I then move my stop up to the 236. Okay. And so as price continues to the upside, I am using the 236 at this point, and you can see as price continues up, my stop moves up with it, collecting more profits as price continues to move to the upside. Now, you can be super active with moving your fibs up as we make new highs, or you can just give it room and not be as active. But anytime that we make a new pivot high, I like to move my fibs up. So at this point in this trade where we entered for $1.83, we're still in that one contract because the 38.2 has held as support on any pullbacks. So right now, that option that we would have purchased at $1.83 is now worth 704 to 715, which some people think that trading only one contract, you can't really have good sizable gains. And I would say that that's just not true, because as long as you have a method to stay in your contract, you can see those gains as price continues in your favor. You might not be collecting profits as price goes up, but there is a way to ensure that you are getting more and more profits on just your one contract, even though you're not trimming along the way. So that's one example, and it's only fair to show another example of a trade. So anyone that's listening to me right now, do you have a name of a trade that you're currently in with just one contract that I can take a look at? Whether it's a swing trade or a day trade, it doesn't matter. It's just the time frame of chart that I'm going to look at. Does anyone have an example of a trade you're in? Trader Bill, snow. Great. How about is that a swing trade or a day trade? And what side of the trade are you on? Are you long or are you short? Long swing trade. All right, so let's look at snow, and I'm going to pull up a daily chart. Okay. And I don't personally know where Trader Bill got in this trade, but it's just showing an example of how to stay in with one contract. So I'm going to assume, right, that Trader Bill got in demand, and we're going to plot this out and see how Trader Bill should stay in this one contract. As far as supply goes, on the daily chart, your supply zone is right here at 186.14 by 194.20. That Trader Bill is the ultimate target to the upside for snow on a swing trade based on the daily chart. All right. Now, I need to find demand, and that is the hypothetical place that Trader Bill got into this trade. And that would be down here at 127.55 by 123.36. By the way, nice move on snow to the upside here. Nice gap up. I believe they had earnings yesterday. So nice gap up. All right. So the same philosophy as the SPY day trade, we're going to do snow the same way. All right. Price began to move to the upside right here on this candle. And we're going to measure to where price is currently at right now. And the 38.2 Trader Bill is at 155.68. That is the level that you want to see snow hold as support in order for you to stay in your winning position of one contract. All right. If we make it to target and you're still holding that one contract, then the 38.2 would then be 162.88. And as long as that holds support, you stay in your one contract. Or, of course, this was the supply zone, this is your profit target. You can exit right at target. There's no need to get super greedy. Don't look back on what you could have made had you stayed in, etc., etc. You need to have a discipline that you do consistently in order to really uh, determine if you are trading a strategy that is successful. So, whether you exit here or whether you continue to ride the price to the upside using the 382 as your stop is, of course, completely up to you. But this way of trading one contract was very popular whenever I was first trading and was trading from a very small account, like a couple $1,000 account. This is how I would stay in those one contract type trades. All right, we got a couple other requests, and so we can do that. WMB for she got TJ got in on November 8th, and she is trading it out for 6 months. And again, remember, we are talking about trades you're in for with one contract and how to stay in those winning trades. So, our profit target, TJ, is the all-time high here at 61.38. Now, if we make a new all-time high, you would run fib extensions to get those higher targets. But for right now, we're going to leave it like this. And I'm going to, you said you got in on November the 8th, which is going to be, let me just change this to a daily chart here right quick. All right. November 6th, 7th, 8th. All right. So this is where TJ got into the trade. And this is where price is currently at. So we're going to run our fib TJ from where you got in to where price is currently at. And you can see that you stay in that one contract as long as price holds above 58.17, targeting all-time high 61.38. As you make new highs, adjust your fibs up, right? And your stop will come up with it. I find this way better to trade than putting a trail stop. I tend to get trail stopped out unnecessarily due to crazy premium spreads and things like that. And so just measuring my fibs from where you got in TJ on the 8th of November up to the current high and using that 382, that is my preferred method rather than a trail stop. All right. And I got about 8 more minutes, so I can take a couple more looks at some examples. Logan says, I'm in APLD. I'm in a long swing trade. You got in at $9. This is great, guys. Congratulations on these one contract trades that are looking good. All right, APLD. I got some targets here on the chart already. So that highest target is 1162, Logan. All right, and you got in at $9. So not far from where price is currently at. So what I'm going to do is I'm going to take this move right here because we are creating demand right now. So I'm going to measure from where the bottom of this demand zone would be if price closes up today, up to the high. And the 38.2 right now is $8.95. So I'm not sure, how much you're up or what have you, but I will tell you that the first place I would trim would have been at $9.50. So I would use this 8.95 as my stop. Or if you are green on the trade, which I assume that you are, then I would have a break even stop if price gets up here to $9.50. Then my next target is $10.49. So if price makes it there and you're running your fibs, your stop would then move to basically that $9.50 mark. All right? All right. Michelle B. This might be the last one I have time for, but I will let you know. PLCE in November 22nd, $16 calls. You paid $1.10 on the Monday, the 18th. Run into earnings, but it did not continue the up move. Okay, so let's go to a 4-hour chart on PLCE. Oh, Children's Place. They get a lot of my money. Not gonna lie, I buy my kids or my grandkids clothes from there. All right, so you got in on Monday right here, right? On the 18th, which is great because this is a demand zone right here. So nice job getting in at the demand zone. I'm not sure if you knew that, but great job. Okay. And then as far as a target, or for me, that would mean supply, I can tell you that that level is right here, 1684 to 1974. All right. This is my target right here. So you can see that today we actually came up and tapped supply. So Michelle, that's why you're getting this pullback currently that you're seeing is price came up and tapped supply right here at 1684, almost to the penny, uh, within 4 cents of being to the penny. But this is where you got in. You said on the 18th. So let's run our fibs here, Michelle. Okay. And I would stay in your one contract. First off, I would have a break even stop because you have hit some targets. So at least have a break even stop, but then stay in as long as price holds 1564. And you can continue to move your fibs up. Some levels that you can target inside of this supply zone is 1817 and 1974. All right. All right. I have time to do one more question. And Doc, um, square for 60 days out. Are you in that trade, Doc? I'm really looking at trades that people are already in rather than just building charts. Okay, great. So you're in Square, and can you tell me from where or what day you got in that trade? You're in calls. Okay, it's in supply. Um, Doc, I know you're a supply and demand trader, so I'm going to assume you got in around this level, 83.76 to 81.84. Is that accurate? Or did you get in luckily down here at this lower demand zone? Got in 11. Oh, you did. Great. That's awesome. All right. So this is where Doc got in. Here's the demand zone. I know that Doc trades supply and demand, so that's awesome. Let's draw our fibs, Doc. You are in supply. You've made it to target, which is great. But if you want to stay in that one contract, you go for it, right? 9604, 100.59, 105.14, and finally 110 right there. And your stop or your take profits on that one contract as long as 8701 holds as support. As price continues up, Doc, just move your fibs up with it and use that 38.2. But now, because you are in supply, if you want to be more conservative and take your profits a little quicker, you can use that 23.6 like I talked about earlier. All right, one more question. Aid asks, how would you trade TQQQ 1DTE versus swinging? All right, let's look at TQQQ. And you want to trade 1DTE versus swinging it. So for me, it's just the time frame that I'm looking for your supply zones and demand zones on. In this case, if I were doing a 1DTE On TQQQ, this would be my supply zone right here. And as far as the demand zone goes, that would be right, and I'm going to use this trendy edge right here. Okay. So my entry would be from here. If I'm only in one contract, I'm running my fibs from where this move up began, right? To the high, which it tapped. You can see that supply zone, and we got the breakdown for sure. And you're staying in as long as price stays above 77.56. All right. And that is how, my friends, I trade one contract and stay in a winner as long as price continues to go in my favor. All right, that is going to conclude my session with you this week. I look forward to talking to you again both uh, on Monday and Thursday, not Thursday of next week because that is Thanksgiving, but Monday of next week right here in the Essentials Room. Y'all have a great rest of your day and much love to each.